Welcome to the Transparent FX Academy. I'm Nick and I'm a top author and trading view with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I will be speaking about CADJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently pushing to the upside quite aggressively. We have reached the previous high, which is a quite strong level of previous monthly supply and resistance, which at the moment should once again act as supply and resistance and at least create some short-term weakness for this pair before then potentially getting broken to the upside. Since if we look at the trend, the long-term trend, it is quite clear how this market is currently in an uptrend, creating monthly higher highs and higher lows. So we could expect short-term weakness and then long-term strength breaking above this area. Dropping down on the weekly time frame, what do we see? Also in the weekly time frame, we can see that this market is quite strong, creating a massive impulse to the upside. But in general, after an impulse, we could expect a correction because no market can just go straight up. At some point, it will need a correction. And considering that this is previous resistance, there is a good probability to see a potential correction away from this zone. We can also notice that since we have an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a 0.32 Fibonacci retracement exactly here that we could expect this market to potentially correct to before then getting rejected to the upside. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, we have to first of all identify structure. What we can see is that this is previous daily resistance that is now turned support. If the market will go and test this area, there is a good probability from here to see a reversal higher, because at that point we will also have gotten already the correction to the downside that we wanted to see, and then at that point more bullish continuation could be created. However, it is also important to keep in mind that if we get this move to the downside, we will have also at that point gotten the creation of this daily M pattern. And in general, after the creation of an M pattern, what we could expect is a potential reversal higher for the completion of the M pattern at the neckline, which is the previous daily support, at that point turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the CAD, what we can see is that with the last reports, net positions are getting increased. We went from having minus 48k net positions all the way up to having minus 33k net positions, showing how we're getting an increase of the net positioning with institutions adding longs going from 15.5k to 28.1k and decreasing shorts going from 77k down to 61k. So the CAD is definitely getting stronger. The JPY at the same time is getting very weak, reaching minus 107k net positions, showing how a massive amount of orders from an institutional perspective are moving to the bearish side of the JPY. So institutions have been shorting the JPY and longing the CAD, making it stronger. This means that if we will have the creation of this M pattern, this could be definitely an area inside of which institutions would be adding longs, further increasing the probabilities of seeing a potential reversal away from this area and for this market to trend higher. So if we will have the correction to the support zone, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4-hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to potentially complete this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here, past the testimonials, you will see that directly from here there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So at least I suggest that you go and check it out at transparentfxtrading.com. The link is also in description, and I will see you in it. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.